Hello and welcome everyone to Gold Asset of the Day for the 14th of July, presented by myself, Phil Carr, at the Gold and Silver Club. So first of all, what do you need to know for the week ahead? We've essentially seen hedge funds and money managers over the previous week, a big increase in net long positions, which we discussed with you last week. In fact, our ranges last week were absolutely spot on, where we found support yet again around that 1,390 to 1,395 zone last week, springboarded higher, broke back out to 1,427 US dollars per ounce. We've in fact capitalized on that trade, still long gold going into this week as well, up approximately about 180 points at the moment. And we've continued to see good follow through, not only on gold, but also on platinum as well. So you remember last week we discussed with you, there was a great opportunity to look at platinum around that 800 US dollars per ounce down to the 810 US dollars per ounce zone. In fact, platinum has now broken out to 2-month highs. So I congratulate those of you who caught that breakout trade combined with the platinum trade, which is currently up 350 points in our favor, and also with the gold trade, which is currently up around 170 to 180 points. We're now up over 500 points on those two positions combined. So really, what do you need to know for this week to get an edge in these markets? We have seen certainly hedge funds and money managers, the previous week they increased their net longs. They have started to take some profits off the table. We have seen a slight adjustment with regard to the smart money in this market, some profit taking that we've seen over the last week. And that is also very evident with the charts here, where gold right now is consolidating in the gains above 1,400, but we've also seen the price capped by about 1,430 at the moment. And that's essentially what we're looking at for this week on gold. Gold's a bit neutral at the moment. It is doing very well to hold on to the gains in that we haven't broken and closed back below that 1,400 level. And this week, the ranges that we are looking at are 1,400 up to the 1,430 zone. So we're looking within approximately a 300-point range for this week. So essentially from a trading point of view, if we revisit 1,400, and bear in mind we're trading at 1,414 US dollars per ounce at the moment, if we revisit the 1,400 layer, we'll be looking for evidence of buyers coming in around that zone. And if we see that, that's, in our opinion, an opportunity to look to build positions around that level. And of course, if we were to break out higher and continue to follow through, the next level we'd look to be tapped would be the previous swing highs around the 1,430 level to 1,438. If we were able to break above 1,438, and that's something which we'll be watching very carefully over this week, and of course as we go into following weeks in the lead up to the FOMC statement at the end of the month, then really the next key level would be that 1,450 zone. But for this week right now, gold is a bit neutral. It's holding on to the gains from the previous weeks. 1,400, as long as that provides support at the moment, there's been buying opportunities at that level, and then we're looking at a range up to around 1,430. The caveat again to that being the swing low from the previous week is 1,385. If for whatever reason we were to see a dollar breakout over this week and into next week as well, if we were to see a dollar surge, then I would look out if gold was to break and close back below 1,400 and then break and close below 1,385, the previous swing low. That is where we're likely to start to see a more significant correction take place. But at the moment, the charts are not showing that, and neither is our data. Right now, we're continuing to see support at that 1,400 level. I congratulate all of you who capitalized on that the previous week. We've had a lot of messages for those of you who are actually on the wrong side of positions previously, where you've been selling short and you've now started to change your positioning slightly, as you've seen very clearly over the latest weeks. A lot of our research that we've been providing to you as the smart money has continued to buy into the market, the retail traders continue to get liquidated in this market. We've seen over 70% of retail traders at the beginning of June, and throughout the month of June were getting liquidated by continuing to try and pick the top in the market, whereas the smart money has continued to accumulate and buy since we've been breaking out above the 1,300 level. With that, what do you need to know for the remainder of this week and as we also go into next week as well? Well, essentially the major news item that you want to have in your diary now is going to be the end of month FOMC statement. Of course, what we want to look out for is whether the Federal Reserve are going to cut interest rates by 0.25%, which is essentially being priced into the market already, or whether they increase that to cutting by 0.5%. And of course, if they were to go ahead and cut by 0.5%, that is where you'd very likely see the precious metals really rocket to the upside, and that's where we could hit that 1,450 level or higher for gold. So that's a key announcement for you to have in the diary. But for this week, we're looking at range bound trade. Look out for evidence around that 1,400 level if we tap that zone again for buyers to come in, and look at resistance around 1,430 for this week. So with that, that's been Gold Asset of the Day, and I wish you good trading. Our first question is from Colleen Segudu, which is regarding the best time to be looking at buying gold and the best time to be looking at selling gold, and really how to get an edge in the market. So it's very important, Colleen, and for beginners in this market as well, to understand that you want to approach the markets with an edge. And that's where it's very important to have a research-driven approach. So what you want to be looking at, you want to be aware of what the smart money is doing in the market versus, for example, the retail trader, where majority of the time the retail trader is wrong and we tend to see the smart money is correct in the market. You want to follow that flow every single week. You also want to keep an eye on very key data points, fundamentals. You also want to be very aware of sentiment, trade flow, and it's also very important that you're aware of the cycles in the market, you're aware of seasonality, and that you're combining this to give you an edge in the market, to give you a trade where you're looking at that with a high degree of probability, either for a buy or a sell. So for example, at the moment, we have the FOMC statement at the end of this month in July. We're going to be looking at the potential for the Fed to cut interest rates, well, at the moment by 0.25%. But if they do go ahead and cut that by 0.5%, that is where you could see an explosive move to the upside for gold. That's really helped to see the US dollar be under pressure throughout the last month, and gold, of course, breaking out towards 6-year highs. We've also continued to see nearly every single week in June now, retail traders continue to sell into the rallies, whereas the smart money continue to accumulate net long positions, and that has resulted in gold breaking out all the way up to those 6-year highs here, as we've continued to see retail traders get liquidated and hedge funds accumulate their net long positions. For this week in particular, we are looking for a bit more range-bound trade. So we're looking for support again to come in around that 1400 level, and then resistance around the 1430 level, and trading within that range. So with that, Colleen, hope that gives you a little bit of insight as to how you should be looking at trading the gold market, and just be aware of the cycles in the market as well. Generally speaking, you tend to see the summer months, for example, July, August, do tend to be quite supportive for the metals, and that's been evidenced by the breakout we've seen last week in platinum, where we identified that range of around $800 to $810 as a great zone to look for buying opportunities. Platinum is now at 2-month highs, trading at $850. So I hope that helps. Our second question comes in from Jonas, and that's regarding when is a good time to buy gold and when is a good time to sell gold. So we mentioned this last week. If you're looking at more of a long-term position on gold, gold tends to bottom out twice per year. It bottoms out in mid-December and also bottoms out in the summer months, typically over June and July. We've definitely seen that more recently with, of course, the big price rally, over a 1,000-point rally or $100 move that we've seen in gold over the month of June here. And now we're heading into the wedding season in Asia as well, especially as we go into August, where gold imports increase a lot into Asia. Overall demand picks up, and it tends to be a good time of year to look for buy opportunities. Our next question is from Tahil Mohammed, and that's with reference to the ranges that we're looking at for gold this week. What are we expecting? Overall, the price action on gold is a bit neutral at the moment. Market's a bit quiet. Currently trading mid-range around $1,414 per ounce. That said, if we were to revisit the lower end of the range around 1400, look for evidence of buys coming in at that level. It's quite a key psychological level and a magnetic level for gold as well. So if we see a tap of that level, and if you see buying coming in, but do make sure you look out on lower time frames for confirmation. You want to make sure you're not catching a falling knife, just in case if we were to see a dollar breakout, obviously gold would then potentially start to break back below $1,400. So with that, I wish you all good trading. Thanks again for all of your questions, and we'll catch you back here next week for Gold Asset of the Day.